Hello and welcome, as it is the 22nd day of January 2018, and everything you do within your own risk and your own reward. And let's take a look at some altcoins again, talk about trading in general. So I'll put up the chalkboard and then go back onto the charts thereafter. And I want to start by talking about investing and diversification. And to me, there's really three. And I know you can have real estate, but you got to be pretty rich to have real estate as an investment where you can unload it practically, well, pretty much any time, thus no one living in it. So the three affordable ones: banking, which is stuff like bonds, cash, and stocks. And then you got physical commodities, precious metals. I mean, you can store food and just have it there if it's got the shelf life, or any type of real physical item. It can be hockey cards or whatever it is. If you feel it's got a value to increase and you hold it, that's a form of investing. And there's cryptocurrency. So to me, if you're unsure of which ones are going to do well, or if any of them might take a huge fall, realizing that we have huge risk and reward with the ones not in the middle. Although commodities, there's always going to be risk reward based on the commodity you hold and how it transpires over time, which is why precious metals do very well in such for that. But when you're in banking, you're in a world where we live in a fiat currency system where the central bankers worldwide can create it basically out of thin air. And we live in a world where that's been going on for quite some time, and for the vast majority of its time, pretty much nobody had a clue. But since 2008, the information going on social media, mostly through YouTube, from what I have recognized, has it's told us what the system is like. So therefore, it's most certainly in a risky scenario, and it already loses value as far as the cash is concerned over time with that of inflation. And then cryptocurrencies, that is every single coin, altcoin that is on the crypto space. So the conservative play is to put 33% in each one, approximately a third of your value. And if any one of them happens to take off, then you're going to be happy. If any one of them goes to nothing or close there to it, well, if it happens to be this one, then that's pretty bad for this world, and it's going to be a serious situation. And it's pretty safe to say people are going to be flooding into these too. And if this one happens to go, then these two most likely are going to remain safe. Now myself, I don't have that much in the top one. I have the vast majority in the bottom two, thus silver and cryptocurrencies. It was at the end of the third week of February of 2017 when I decided to get into crypto space trading Bitcoin, thus ultimately trying to outperform the Bitcoin market as a whole. And at that time, practically every single cryptocurrency was in a bear market, with only the very few and nice bullish setups. But a week or so after I started trading, things changed. Everything went up for the most part as that rallied into the end of the spring. The vast majority of the cryptocurrencies, alternate ones, practically all of them, in a bear market, with most of them bottoming in the early December timeframe. And weeks later, they all went up to big proportions, but since that point, they have congested in a symmetrical pattern for the most part. Bitcoin, no exception to the recent time frame. And my feeling is, as far as the alternate coins are concerned in the general, that the gap fill for a lot of them. And in some cases, if they've went down well, even hitting a previous low, but making another leg lower is the key one, is most certainly a possibility. But when these things go up, I mean, the December rally from a lot of them is huge. And I'm thinking that as it moves forward, that the case is going to be again mainly February into March of this year, or really until the end of the spring, I'm thinking right now. Because it's always about adjusting to the message of the market anyway, because I'm not going to be caring about the information from the start of the fourth week of January when March comes, or very little of it. And it's always going to come down to risk reward management, always being job number one. And as far as emotions go, this is a roller coaster. Acknowledge it, understand it, and when you understand it, even try to profit from it. But whether you're winning or losing, just stay calm and keep focused. Anyway, let's move on to some charts. And I talked about meme yesterday. And when I'm looking at the moves that it has on the daily basis, as well as its actual trend, and I mean the moves on the daily basis as in all of these types of situations, I was able to take advantage of this one because I just got in. But also, of course, the up and down swings that arrive within this chart. Let's take a look at this on a 60-minute time frame. And I ended up getting in at an average cost price. I bought this on a couple of occasions, 3 occasions actually. 66.35, I think either here or here. It was yesterday, so probably in here. I think I was looking at it in here and I had a buy order in for this number, then I bought again, something of that nature. But I ended up selling about a third of my position, roughly around 78. And then the price comes back to 61.34. That's where I bought. 61.50 now. So therefore, I've overperformed the market, although I would technically barely do better by buying now than when I originally did, but I'd be better off, of course, like I stated, because of that transaction. But because of that buy order, I can now put a sell order back again above here, and I did. And I have sell orders above because I sold a third of my position at the high 6,000 or the high 7,000s rather. And I have another 2/3 to go on the higher levels and buy fills. When the market had the first segment down in here, I didn't buy because my lowest buy order, or highest one rather, is right here. And it's still there. And I got, well, not there, but some, I think even, actually, I think it was probably previous low. I probably should have 3. I like 3 buy, one or, you could have, depends on your how many positions you want to have, but I like buying at this previous low in here, maybe a bit of a pierce below. The previous low right at the end of the 16th is an area where if it goes down towards 2, I'd be looking to be a buyer, and then maybe somewhere along the middle. But a lot of it, when you see it, like adjusting to the message of the market, is you see where a key area is and where it would go to, and one would say don't even worry about any of those middle prices or even that first one, other than maybe for a small position, which is exactly how I got it set. I'm only buying a little bit at the support of the 8th, basically the support of the 20th day, but I'm buying more on the support on the 16th day. And the reason why I sold a third of my position when I normally would sell on a scalp of that short term, like 20%, is because I couldn't buy too much. I only got one entry point. I don't usually buy things and then that's it, unless unfortunately the market forces me into it because it goes straight up. Let's soon move on next to KMD, which is Komodo. And this is something I have been buying a little aggressively the last few days. And I still think that it could even come back down to this 18 average of lows within the daily time frame. Or another way of stating that is, with all the point A's and point B's, and really point low and point high, that the further low I would expect could be here. But I would be very, very surprised if this area actually fails to hold as support. I think whether it's now or later that this would be an area for the bottom, what we'd end up seeing within this is price action to move above the 18 average and above this previous resistance area. Then at that point, the 18 average would start to increase. And well, I guess if it doesn't do that, it'll just do what happened in December and go straight up in like 5 consecutive days and then just say, how you doing? But I do expect that this thing is going to do very, very well. I'll take the chance, risk reward, that this thing will have some good gains. Let's take a look at this on a longer term time frame. And I'll use the 2-day time frame, just an extra day, but enough to show in here that when this thing can get above this resistance level, and even this as well, that this thing is almost, this thing can go wild. Now, the one cool aspect about this would be is when this thing had its big rallies before, and I'm looking at 3, which is the one in May, again at the end of August, and the December rally, all the tremendous gains. But look what we noticed where they start from. This one started from here, and then this one starting in here, and then of course starting in here. So if we have this starting in here or anywhere else soon, if it happens to correct longer through time or price, then the potential for this gain would most likely be a significant break, and it could even outsurpass the bar, if you will. And of course the bar is what's been set, like what's the record, if you will, and you try to outperform it, or at least it gives you a precedence of what it's capable of doing. But when I look at technical analysis as a whole, when you have a situation within a very long consolidation where resistance and support is played for as long as it has been, and it finally breaks through it, and I do think that it's finding its successful support within this 18 average on this time frame, that it's just going to take off. Now, if you're looking to try to get in its quick, I guess, quote unquote, more risk reward safer, and yeah, quick and safer, is you wait for a significant break of resistance. That means the price has to be significantly above this high, and then you want to find even good specific short-term targets. I don't do this, so I'm not going to explain much further, but all I will explain is when you see it happening and you realize, well, okay, well, you're buying in here, great gains, it didn't take you long to sell. Where was it that you would have been able to take advantage of the September rally? That one would have been difficult. And then it's always difficult for me when I see the December rally, when, okay, well, at what point was it safe to break through? Because it got to this resistance point. Okay, previous level in here, that's an area for resistance. Okay, a previous level of resistance. Okay, so now it's a breakout point just around this area in here, but it's already been overextended at that point, which makes it very difficult to be a buyer in those situations. And the one, of course, at the start of the year gave you definite good reason, because what I liked about the start of the chart was the consolidation in here, and then when it broke resistance, it was very strong. Well, this one to me would be extremely strong again as well. Let's move on to the next code, and that would be Verge, or will be Verge. And we'll look at the 400-minute time frame since the December highs. And in this situation here, we had a correction of higher volatility that occurred in here. Look at the size of the candles here compared to here. So a lot of silencing going on as far as price action is concerned. And because of that reason, because I like Verge on the long-term time frame, because I sold, the last bit of Verge that I sold was at 1,000 Satoshi 960 area. Because I can swing trade this now, I've decided to, or just buy little bits, portions, but to buy a little bit now. But like with the MEM, I only bought a bit of it. I got buy orders ready to go for a significant move lower if it happens. But it's all about buying in positions every time it has a nice leg lower for a coin you think you like, or for a market that's going to swing enough up and down to be able to profit take on the long term is the ones you want to do it on. That's what I want to as well. As far as a level of support is concerned, let's take a look at the area which was such back at the end of the year, start of this year. It's obviously been a level of resistance. So there's a lot of concerns within this low volatility that we could be coming up to this price. We're in a symmetrical triangle. Usually any type of these kind of patterns resolve themselves within the trend. It's pretty much at that level. In fact, if I draw the line, just redo it. If I draw a trend line amongst these two lows in here, yeah. So it's going to break its way through one side or another. But the thing about these symmetrical triangles, it could just also be continuation of sideways action. But yeah, these things resolve themselves in the trend. Well, to me, that's I can make a case for a bullish and bearish one. It's been bullish for its entire long term and this December pull, which is obviously still finding the higher low. So that's all nice, fine, and dandy. So on the bullish level. But since then, of course, like I stated, it's been resisting where it's been supporting. And I would... yeah, at this stage, that looks bearish. Now, let's move on back to the chalkboard again. And I want to talk about what would I be doing if I was just getting into cryptos for the first time. And right now, Bitcoin prices are lower from where they were on the Christmas highs, as well as the altcoins from those levels. So there could be further downside action as well. But I like the fact that if you're getting in now, you realize that you've gotten decent amount of corrections. The secret to buying is buying on the way down for me. So I'm a little optimistic with that case, but because I know there's further downside action, that means that I want to be holding a decent amount of Bitcoin. And I guess if I knew what LITECOIN would be about, I'd pretty much move into the strategy that I have now, holding mostly Bitcoin and LITECOIN and then doing some trading on the side. But realizing that the best way of playing this is to start entering into different alternate coin positions by buying a little bit now and then deciding which ones I want and the prices that I want to get them at. So it's always important is decide within your portfolio how much you want to have, say, available to buy now, how many Bitcoins you want to hold no matter what, how many Bitcoins you want to place in buy orders, how you're going to play selective strategies. So generally speaking, given the fact that I've just reorganized my portfolio over the last several days, I would most likely be doing around what I'm doing now. And because of such, I want to talk a little bit about Bittracks now. And they have the 28-day removals, which are not cool. Because when I'm showing these long-term charts, it can take 3, 4 months, 6 months for these buys and sell orders to execute. But it's all about long-term trading, and the amount of gains you can get within 2 to 3 years doing this is so phenomenal. Anyway, throwing that part aside, as I'm looking at the market, I'm expecting the markets to surge into February, like February 15th, 20th time frame. Of course, there's many, it might not. I'm just thinking that's how it's going to be playing in towards. So I realize that if I put buy orders trying to get in the cheap prices now, it'd be all fine if they all cancel out within the next month or so, because I've been placing quite a few different ones for different prices. I've shown some of them here. I've also did other ones I haven't shown as well, but that's what I like about it. And then place mini orders this week and reorganize it February 17th-ish time frame. I've already added the Verge, as I've mentioned, and when I'm doing that is swing trading that, or just buying low, selling high. And I want to show another example of how I like to do this type of strategy as far as the buy orders are concerned. This would be how I would like to set up an order book for a particular coin. You've already bought some, and now you have sell orders selling 800 at 9.25, 10 less at a little under a 10% gain thereafter, another 10 less, another 10% gain, or whichever number you choose. I like the 10% number for these codes, but with Verge, what I like is I can literally get a lot of transactions. It's very good with high volatility normally, although I've talked about it slowing down. And then a whole bunch more, just like around 15, 18, 2000, 25, on all that numbers going lower. And you want to ensure that you're able to sell at the much higher prices as well. For buy orders, notice the numbers here is, if I buy this at 900 at 800, I'd probably put a sell order to sell 810 of them at about 875. And then the same thing again, knowing that if I do that, I'd have 98 back, and I usually leave those back for the higher prices to sell later. But I also got a much larger, if I'm looking to buy something because I think it's going to go down, then I will do something like this, where I'll put a much bigger buy number on a price, and which I think is going to be cheaper. Maybe even buy 4,000 or 5,000 at this, or maybe even another 2,000 at 500 as a strategic level to try to accumulate it when you think there's a good chance that the market is going to bottom. I'm using these as just a basic reference tool. Now in the situation, let's say a sell order comes in and I sell this, then what I'll do is I'll copy the amount of Bitcoin that I receive for this, whatever that number is. I'll put a buy order in, probably for the price area of about 840, 830, and then paste the amount into the Bitcoin. So I would be looking at buying about, if it's about 830 anyway, or 835, that would be about 880 or so, or 800, around that number, I would be buying. And then of course, when I do that, every time I buy, I'm going to be selling a little less than what I buy. Now in a situation where if this big ones were to come in, then delete all of these orders, redo it again, and you'll start to notice that instead of selling 800 at this price target area, you'll be selling about 900 or 940 because you have a larger amount of tokens or coins to play with. And yes, so that's the strategy that I like to use. So thank you for tuning in to today's video, and have yourself a great day. Bye-bye.